Hello everyone. Today we will learn about EPS or earning per share. What is EPS? Let us understand this with an example. Consider the example of Apple to calculate EPS. Note all the money is in millions and the number of shares are in thousands. For the end of the financial year, the total sales of Apple products is $365,817,000,000. The total cost of sales is $212,981,000,000. To calculate gross margin, we subtract total cost of sales from total sales. The total operating expenses for the financial year ended is $43,887,000,000. To get operating income, we subtract the total operating expenses from gross margin. We get the total operating income of $108,949,000,000. Net other income and expense are of $258,000,000. The income before tax is calculated by subtracting net other income and expense from operating income. The provision for income tax is $14,527,000,000. The net income of Apple is $94,680,000,000, which is calculated by subtracting provision for income tax from income before tax. The average number of shares of Apple is 16,701,272,000. Earnings per share is calculated as net income minus preferred dividends divided by average number of outstanding shares. In case of Apple, the preferred dividend is 0. Therefore, EPS is $94,680,000,000 divided by 16,701,272,000. The earnings per share comes out to be $5.67. Thus, EPS indicates how much money a company makes for each share of its stock. This EPS is also known as basic EPS. Suppose, if a company buybacks its shares from the market, then the total number of outstanding shares decreases and hence earnings per share increases. Many companies issue stock options, warrants or restricted stock unit. These investments, if exercised, could increases the total number of outstanding share in the market and thus decreasing the earnings per share of the company. To capture this effect, diluted EPS is calculated, which assumes that all shares that could be outstanding have been issued. The formula for diluted EPS is net income minus preferred dividends divided by outstanding shares plus diluted shares. In case of Apple, the outstanding shares plus diluted shares is 16,864,919,000. Thus the diluted EPS for Apple is $5.61. The EPS data of a company should be studied for longer periods like 3 to 10 years. The longer period EPS CAGR growth gives us better picture. If EPS of a company is continuously growing, then it is considered as a good sign. EPS should not be the only parameter you should consider while buying shares of a company. Along with EPS, other financial parameters must also be taken into consideration before investing. Thanks for watching till the end. Like this video, subscribe to this channel and hit the bell icon, so you will get notified every time I upload a video related to stock market investing.